Is Procter& Gamble an excellent defensive dividend stock to buy for 2023? I'm going to answer that question in this video, so stay tuned. Of course, Procter& Gamble's stock performed relatively well in 2022, falling just 7% when the broader S&P market index fell nearly 20%. The stock did well as consumers looked to reduce their spending on things that they were buying more of earlier in the pandemic, like electronics, TVs, computers, laptops, those types of things. And they focused more on things they were going to need as economies started reopening. So the first thing I'm going to look at for Procter & Gamble is quarter over quarter, year over year revenue growth going back all the way before 2014, and most recently the revenue increased by 1.3%. That's down from the more robust revenue growth Procter & Gamble experienced in the earlier stages of the pandemic. That was to be understood. Consumers, when they were flush with stimulus checks, were spending more money on more premium branded items like Procter & Gamble's products. Now, as inflation is pinching consumer budgets, they are trading down away from Procter & Gamble items into other store brand items that tend to cost less per ounce, per unit, and so on. And so that's going to be a headwind for Procter & Gamble going forward. The next thing I want to look at is Procter & Gamble's quarterly operating income, and what you could see is a very nice increase over time, starting from a little over 3 billion in 2014 to just over 4.9 billion most recently. And even if we look at the bottom end of this of their cyclical quarterly operating income, you can see a nice upward trend here. And that really speaks well for management for a company that's not growing revenue very quickly. You see, most of the last decade, revenue is barely increasing, and they found a way to still increase operating income despite flat-ish revenue growth over the last decade. The next thing I wanted to look at is cash flow from operations. And companies' cash flow from operations, even though it's fluctuated up and down, it stayed at about the 4 billion range going back over the decade. Cash flow from operations pressured in the recent quarters as revenue has came down and as inflation is pinching Procter & Gamble's profitability, although thankfully in the most recent quarter or two, Procter & Gamble has said that the amount that inflation is hurting its profitability is coming down as pressures ease from fuel prices, transportation prices, and all of those pricing pressures are coming down a bit. The next thing I wanted to show you is Procter & Gamble's average diluted shares outstanding, and what you could see is a clear downward trend of shares outstanding as Procter & Gamble has repurchased billions of dollars worth of its stock. It's brought down the average shares outstanding from 2.65 billion to 2.5 billion, and it's continuing on this path of returning cash to shareholders. That's going to be good news for existing shareholders, as that's going to increase their earnings per share just by the fact that there's going to be fewer shares outstanding. The existing profits are going to be split among fewer shares. So to finally answer if Procter & Gamble is an excellent stock to buy for 2023, I want to look at its valuation, specifically its forward price to earnings ratio. And Procter & Gamble is trading at a forward PE of 26. That's up considerably in the last couple of months from the less than 22 forward PE it was trading at, and this PE of 26 is above the average for the S&P 500, which is near 16 to 19, and it's also near the peak of Procter & Gamble's PE ratio, forward PE of 27.5. And in my opinion, this is a little too pricey, too much of a premium to pay for Procter & Gamble. Yes, it's an excellent dividend stock. It's an excellent defensive stock. Sells household necessities and so on, and should hold up relatively well during a recession should the economy enter into one. However, a forward PE of 26 is too much of a premium to pay for this kind of a stock that's had, relatively flat revenue growth over the last decade, and over the next few quarters, revenue growth will remain challenged, especially if consumers continue trading down to less costly options. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.